Hi, everyone. Happy Wednesday. It's just me today and you, but we're in this together. We're going to chat about a few things. And I guess I'm going to make my case and kind of state my thesis as far as FOMO, right now, the outlook for precious metals specifically. And we're going to look at some of the crypto craze that's going on. And I'm going to put my thesis out there. And I think it's important because it's an interesting conversation. But it kind of delves into the dichotomy between different types of mindset as well as different types of trading, and how you can make money, and all of that's important. Let's kind of take a step back and say I'm not a gold bug, never have been, but over the years I've certainly put more weight into that than most other things. Partly because I just got educated and really spent time looking at mining and how critical it is for our future. That was a big part. And then it was, the 2008 event and onward, the complete debasement of currency. And for me, then it was looking at the history of money, which is fascinating. And I like history anyway. And then also, I'm a big tech guy. I love tech. When I worked at Merrill Lynch, I tell this story often. That was during the first internet bubble craze, and it was exciting. And although Merrill was bigger deals, it was and bigger failures, if you remember pets.com. But you'd see all these ventures and small startups and everyone's making money until the rug was pulled out. And it didn't mean that the whole internet bubble was a scam and that there was nothing there with big tech. It just meant that most of it was not real. It was a bubble. It was a craze. And that real companies, out of all that, let's say, price discovery and R&D, real companies emerged. And that really lifted all sales, even through tough times. And I think that we're seeing somewhat the same thing when you look at the world of crypto, is that we know already from when we look back at last year that 90% plus, maybe it's 95% of all crypto were scams or frauds. They just went bankrupt. There was lots of theft. There's lots of investigations. There's all sorts of things. That's not a surprise. What's a surprise is how everyone seems to have forgotten that, and just it's back raging now. And before we get into to that specifically and talking about it, I also want to say that I do think in that it'll act the same way. There will be some type of price discovery as well as feeling out. Most of these will be complete devastation and failures at the end. Doesn't mean you won't make a lot of money in the meantime. You can go create your own meme coin and maybe make some money. You can make money on it. The speed at it too is very intoxicating for people. And the amount of money they have to promote is incredible. It's beyond any budget that any mining sector could ever come up with to promote this stuff. And that's how you create markets. It's all promotion. It just really is. If you can just be on CNBC and you can be on Fox and you can be on the Wall Street Journal pushing your coin, your platform, your technology that is going to revolutionize finance and the banking system while saving lives, which just always seems to be what they like to throw in there, then yeah, you're going to be in people's minds. And if you can provide liquidity, that's what also needs to be seen. And you can do scale. So now I sound like I'm being a bit hard on that whole front. I think in that, just like there was the first time and whenever we talked about it, there are real projects that will get used, that will get implemented, that is the token part of the coin worth the value of it or not? I don't know. It's not for me to say, but that the technology behind there, yes, very interesting, very compelling. And I'll kind of wrap it up by saying, when you even hear someone like Elon Musk with his Doge department that we're hearing all so much about and cleaning up wasteful spending, and with it being the moniker of his Doge coin as well that he pumped up, that's a scheme all in itself. He makes reference to that there needs to be some sort of digital solution to this financial crisis and this debt crisis, and that it will look a lot like a Doge coin or some of these other coins. He's never said it's going to be that. He's never said it's going to be Bitcoin. It's going to be this. It's going to look a lot like these. And that's been my stance the whole way around. There's zero chance, I'd say, well, maybe zero is there's a very extreme, slim probability that any federal bank or Federal Reserve or private institution of that nature, or even a government institution, is going to willy-nilly hand over control of monetary policy to a private entity like Bitcoin. Never going to happen. It just doesn't. It won't. That just is a silly narrative that someone hasn't thought through. I think it's neat. It's a fun discussion. It's kind of the anarcho-capitalist libertarian viewpoint that's very interesting. It makes for great philosophical discussion, but that just means you just don't understand how politics and history works, or finance. There's no vested interest for any of these groups to do that. Now, I don't want to get too much in the weeds yet into that because I'm jumping around on a lot of topics, but I do want to first play something because it's very important. It's I think it's from a podcast called Norg Finance, which is Northern European Finance, Norg Bank, and this is Mark Rowan. And it says like he's worth 9.1 billion, and he's going to fill you in a little bit on what the markets really are today, and I think he's correct.
Markets do not work the way we think they work. In fact, nothing works the way we think it works. Think about what's happened in US markets. 80% of volume, S&P 500, 60+% of the market passive. 10 stocks, 39% of the S&P. 4 stocks have determined basically profitability for the last 4 years.
Yeah.
1 stock is larger than every public market other than Japan. That's the universe you're going into.
So you're saying that the public market is very risky?
I'm not saying it's risky. I'm saying it's indexed and correlated. And it is about capital flows now. It is not about price discovery of an individual security in the short term. Think about people who are supposed to be able to outperform the index.
Let's pause there for now. So you might be asking, wait, why are you talking about equities? We're talking about coins and precious metals and whatnot. Because the key term or key idea there is it's not about price discovery. That's his thought. You could argue about that. I think there still is some degree of price discovery, but it's about capital flow. That's the number one thing right now that we can see. And it is trading. Like if you look at technical analysis versus fundamental analysis, if you're watching cash flow and flows of capital, that is a style of trading. And is there a massive influx of capital going into meme coins and cryptos and Bitcoin? Yes, there is. Is there a way to make money off that? Yes. Does it mean it's real? No. Just because there's inflows into something, it might be an indicator that something is good and useful and worthwhile. It doesn't there is not a complete correlation. There is an indicator that is good, but it doesn't mean that it's real. Because once again, we saw, like I had mentioned when I first started at Merrill, we saw an internet bubble of massive cash inflows into sectors that was lost. And this is what happens with bubbles and mania. And this harkens back to shows we've done in the past where we talk about like the tulip mania. That's very famous. The Madness of Crowds. Oh my God, I'm going to wreck the book title. Incredible book, which talks about the different manic episodes we have with greed and fear throughout our history as humans on this planet, where people were willing to buy a tulip for very much the same reason they're willing to buy a Bitcoin. I imagine the argument was exactly the same, was we're willing to buy this tulip bud for the equivalent of today $100,000 or more, like a house. And you go, how could someone in Holland think that that's worth, like this tulip bulb, it's a flower, like that's ridiculous. And you go, well, because it's an asset. Yes, I guess a seed is an asset. I guess to some degree it is going to grow something. But if it has a perceived value as an asset, then yes, it's worth that. And that's true. But that's how a mania works. Now, is Bitcoin worth X dollars? Well, I don't know, because you're asking me, what is this monetary or currency or type of money that they'll claim when you're quoting it in US dollar? You're telling me it's worth this because it's worth is what it really is. I want the US dollar. Very few people are buying the coin when they're talking about it to go, I own the coin. Well, what's the coin worth? Well, it's worth $100,000 almost US. Okay, well, what's it worth if I'm going to buy something? Well, you can't buy anything. It isn't transactable. And I know people are going to get very mad, and I like when people get mad. I don't care. It isn't transactable, and it was never designed to be a daily transactable type of tool. It does 7 transactions per second compared to something like 40,000 at Visa or whatever it is. It's so outlandishly different, and I've made the numbers are different. I've got it written in our blog where we've gone down and listed how how transactions work. It never will be able to be daily transactable currency. It won't be a money or anything of that nature. What it can be, and where I think it has an argument, is that it is a asset. Asset is telling you how far along has our technology come compared to energy. It becomes like an S&P all of its own, is that you say, well, it costs this much to create one. I would argue an incredible waste of money because it's solving a problem that isn't a problem. Pretending that this private entity that can't be controlled, of which it can, is somehow going to usurp all governments in the world so that they can't monetize or have monetary policy off of it. Now, that's very basic. I know that if you get into the weeds, it could be implemented in some ways. What I think is more likely is that, yes, it can show as a benchmark to say, this is how much energy it costs to make one of these things, as well as technology speeding up. And we see with AI-generated graphics cards, it might speed up even faster, that we would have this correlation between it costs this much, our technology is here. That's an interesting metric or a barometer for us to test where we are as a civilization. And I think that's an interesting proposition. What it isn't is the dreams that people are going on about. And if anybody's been looking at it, once again, take away the fact that the biggest argument being, well, look how much it's appreciated. That isn't an argument that something's gone up in price. And if it is, that's not a very sound argument. You have to remember, people at one point were buying pet rocks. Were they worth it? People were buying tulips for houses instead of a house. Was that worth it? No. Did it appreciate? Yes. Was there money to be made? Yes. So if you go in with your eyes open and try to scratch away the narrative compared to what is this actually, what's the likelihood of this being adopted as what they're saying it's going to be, compared to, is this a type of price discovery where we're going to see what seems to be adoptable, what technology behind in the contracts or in the blockchain can actually work. That's more interesting. Or if you look at products where they say, well, why don't we have some sort of product that's backed by an actual commodity? We actually have to use these commodities. And in fact, we don't get to have any of this Bitcoin metric or barometer or test of technology or energy unless we have mining and commodities. So is there some way we could blend the two? Yeah, there is. That's interesting. What I want to just kind of talk about today was the fact that what has changed in the past month to 6 weeks, that all of a sudden everyone's forgotten all the frauds of all the cryptos and whatnot, to now being back in FOMO, things are going up. It's the fact that they've gone up 200%, 400%, 50% in a very rapid period of time. It's amazing how a little bit of shift in money makes people forget. And that's fine because, yeah, there's an opportunity to make money. Do I think that Bitcoin could go to 250,000 by 2025, 300,000? Yep, I think it could. Could it go to 1 million by 2030? Yep, I think it could. What do I think long-term that it would likely happen? The rug will be pulled out, and those companies that are promoting it now will have made amazing amounts of money off of managing their ETF, and they'll exit quietly while you're left holding the bag. Do I think that these funds and investment banks are capable of doing that? Yeah. So I'm very hesitant on any of these things, because if your argument, say with a crypto or a Bitcoin, is not easily understood or explained, or that the narrative is just simply not true, that's a problem. It's not hard to explain money to people. It becomes more gray area. We say, well, it's not money. It's just an asset now. That's very challenging. And, you know, they like to go to gold and say that's an asset because it isn't giving you a return per se, compared to if you said, well, I'm going to put in instead of a Bitcoin as an asset, I'm going to buy a house, or I'm going to buy farmland, or I'm going to buy something real. They're trying to equate the two, that this virtual thing is just as real as reality. And anyway, my point isn't to get too much in the weeds of the philosophical conversation of it all, but it is that to find a healthy balance between the two, because unfortunately they're in competitions, and it's that cash flow where money can flow into that is very, very interesting and important if you want to understand what's happening with precious metals, what the outlook for precious metals is going forward, and what might happen. And I'll just kind of take a step back again here to what was that big change that occurred last month? Well, it was that, let me just look here. Yes, according to the digital advocacy group Stand with Crypto, 257 pro-crypto candidates won seats in the House of Representatives and 16 secure positions in the Senate of the U.S. in the last election there. I know that I'm not allowed to say election. YouTube gets pissed off. I don't care. This will go out more on X likely anyway. And just as a parenthesis, if you're not aware, yes, when you do things on YouTube, they will get censored. We get feedback from them if we have guests that say anything about key topics that they don't like. They'll literally say shocking content, and they won't promote it. Just an interesting side note if you're wondering the world we live in today. But in this pro-crypto election, they spent anywhere, I mean, depending on where you look, up to $228 million in the election. That's a lot of money. And that's a lot of money because they want to get legislation through. And believe me, I don't want to get into the weeds on the legislation and the wording, but let's just leave it at this. It can't be a currency because it falls under legal rules of another way. It can be an asset because you're vaguely describing something instead of firmly describing something. And that wording is important because if it's security, you fall under security regulations. Part of the wonderful aspect of crypto and why it's a pump and dump often is you're allowed to say outlandish things and you're not held responsible. You're not a security. You don't have to be registered. You have no ethical constraints. You're not going to be fired by your job because it's just something that's out there. It isn't. You don't work for Bitcoin. So it's not an easy role for a policymaker to also kind of decide what is this thing, and that's a philosophical conversation. It is critical moving forward to see how digital money is constructed moving forward. And of course, it comes back to that big discussion about the division or the polarization of the East and the West, with the hints of BRICS having some sort of commodity-backed, possibly gold, possibly silver-backed currency. And of course, then with all that discussion, we've had great guests on to talk about that. Andy Scheckman, Chris Marcus, you name it. They are very well versed in any of these things. Peter Kraut. And that being said, we'll have David Morgan on next week. I'm sure he'll touch on that. We see, Trump saying that these tariffs. How's that going to work with gold and silver and whatnot? And he's threatened the BRICS nations that if they don't play ball, there's going to be some financial tough love. And that serves two different things. It's a big stick, to threaten someone with, but it also drives home in a lot of these countries that feeling of being bullied, and that maybe it slows them down, but it also perhaps quietly speeds them up to saying, no, we don't like this situation. We don't believe in your dollar, because the same argument that we like for gold and for precious metals and commodities and something that's real is the same argument you can use for any virtual or blockchain or crypto. They are synonymous. I mean, people recognize there's a need for a change or some sort of fix from the system we've gone in, from the depreciation of the dollar. I know people say, well, the dollar's up. Yeah, but it's a depreciation against the value of what you have. I mean, the inflation of things has been incredible. over the past for years. Now that's a bit of a nuance that people will get into, more on economic channels, and isn't something for anyone in retail that would instinctually understand or know. They understand that things cost more right now, but more of that. Well, if you print money willy nilly, there is a time of reckoning, and that doesn't mean it's tomorrow. But the U.S. is coming pretty close. I mean, their interest payments are astounding. It's over $1 trillion to service this debt, and it sounds like, and I think it's fair to say, especially now with Elon Musk coming in and being a big vocal advocate, along with Andreessen, who's good friends, along with Peter Thiel. These are all good friends. Andreessen is Andreessen Horowitz, who owns Alphabet, who owns every tech company. They're a venture capital fund. These people are pro-crypto, pro-digital solutions. Remember as well that there is a Fed coin white paper. Are they going to come together and put something together that not devalues or revalues the market and the currency and what people, how do they interact with markets? Yeah, I think it could happen. Is it going to happen this year? Well, it could take baby steps, but that's a massive undertaking. And in the meantime, I still want to own precious metals because we don't know what directions it's going to go and we don't know how the world's going to react. And no one likes to be forced to use something. So there's still challenges ahead. And it's hard for me to even get my head wrapped around how you would revalue the US dollar with the debt that it has without doing a type of rollback, which would be horrible for a lot of people. But you can't just simply erase. I mean, inflation erases some debt. But once again, there's people that have to pay for that. Even though it's not your upper end of people, there will be winners and losers, believe me, even at the top end. So this is my roundabout, long-winded kind of take on where I understand that digital money is coming, where it's going. Do I think we're going to have a CBDC? We won't in Canada. They've voted it down for the time being. Sooner or later, maybe, probably. Same with the US. I think same with everywhere because it is more efficient and effective and everything else. The biggest issue with it is that people are concerned, and rightfully so, that who is the government trustworthy? And unfortunately, we live in such a polarizing place in the West right now that people don't feel like it is. Or one side feels that they're not trustworthy. The other side feels that, yes, I want like a nanny to daddy state who does take care of me, and I want them to make all of my decisions, and I don't want to make any decisions. And that has never existed more in contrast than today than ever. And of course, I don't think it's hard to imagine which one I prefer. I think people should have more personal accountability and responsibility. They have enough agency to make decisions for themselves as a family, for their kids, for everything else. And that's where I think having a bit of whatever crypto it is that you like, along with precious metals, is a good hedge. It's a pretty good hedge. I think you have to go into them with open eyes, certainly on the virtual front, because it is that you're trading on hype right now. And we'll do lots of things over the course of the next year, whether it's Saylor borrowing hundreds of millions of dollars to buy this and that, because there is sound ideas behind doing that. I think it's exceptionally massive levels of risk, but it is an interesting conversation, and it isn't too far out of the wheelhouse of precious metals because their argument is the same, and because their argument that they're leveraging off of is the gold kind of inflation argument, sound monetary policy argument. That means we are at odds. I don't think we need to be, but they really are trying to gain the traction because I'm bouncing around. The crypto space, Bitcoin space is a fraction of the gold space. If they can gain more market share off of gold, it's better for them. Because once again, we're talking about money flows. And what's interesting is what we're seeing in the West is retail money flow to some extent into the Bitcoins and the cryptos and whatnot. Not as much retail into the commodities and the gold sector. Whereas the banks are the ones buying gold and precious metals. And just to kind of leave this as a thought, I always kind of like to remind people that the idea that you're going to be outside the system by owning Bitcoin is hard for someone to get their head wrapped around, because you have BlackRock and the U.S. government and Michael Saylor and a ton of Chinese firms who are the main owners of this coin. These are exactly the system. BlackRock is the system. So these are your partners now. These aren't the libertarian type people that originally were in this. I'm sure that some of them are still in it, but the narrative is totally changed. It's not the same, which is also interesting when you're looking at any of these things. Is, has the narrative changed from when it first started to where it is today? Gold's hasn't. Like, it hasn't. Precious metals hasn't. That's where the risk-adjusted place to have capital leans towards a physical commodity. You have to use them. Can we live without a crypto? Yeah, of course we can. Is there some interesting projects? Yes. How many are there? Thousands. And that's a challenge. But I can't ignore the fact that right now people are struggling. They see a coin go up 400%. Let's play this video too, because this, Adam, pull this one up. This is a good example of a make your meme coin, which you can do now in anywhere between 5 to 40 minutes. We can make a market mindset meme coin right now if we wanted to. So let's just watch this quickly here.
Yo, 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 what the fuck?
Yeah.
Nah, bro.
So we'll hop just to the end here.
The
where he's
crypto
going to
community
celebrate.
Holdings worth over $1.28 million if he hadn't sold them. Adding to the drama, crypto sleuths doxed the trader, exposing his identity.
I have no interest in this young man doxing him. I mean, I can get it what he's up to, but basically he scammed $30,000. So he created a meme coin, and now you call it a scam or fraud. It doesn't matter. There's no real regulation around it. He created a meme coin, he pumped it up, and then he exited and made 30 grand. Part of me thinks, oh my God, what a brilliant young and genius young man. And good for you. But at the same time, that's a classic pump and dump. He's pumping it, promoting it. He's live. He's getting people excited about it. And then you can hear the reactions in the video where they're all kind of going, what the hell just happened? As it just boom, because he dumps it all. And here's the problem with a lot of these things is the classic pump and dump that you would see in the exploration, oil and gas, exploration, mining era of the 80s and the 90s. And, even to some degree today, it's not the same today as it was. You could go out there, wild west, make claims, sell the heck out of something, make all sorts of ridiculous claims, unregulated, and buyer beware. And listen, if you're a libertarian, then that's fair game. It should be. If you're knowledgeable and you want to get into a sector, it's on you. Do your homework. And I agree with that. You have to take on some responsibility yourself, show some interest, get excited. And that's an extreme. Like that young man's quite an extreme example of it. And but this happens all the time. This happened nonstop. We saw it play out during lockdowns. All these companies that you found out whether they were offering this, that, or that, there was some sort of fund or they were a wallet. They were frauds. It was nonstop, and we've reported on that. We've done videos on it. It's not hard to find out, and it's no secret. And there was the dissolution of many banks because of it. So moving forward, I wanted to touch on one thing here that we're just finishing off the article today, because if there's one out of all of them so far, I'll say that there's one that's interesting, and it's called because it's a uranium platform. And I'm not saying to go look at it, but it just popped up in my feed yesterday. It's uranium.io. They're looking to make an investment-friendly and transparent fractional ownership of physical uranium on a smart ledger. Interesting. I don't know anything about this. I wouldn't say go buy it. I wouldn't say even whatever. But the XU308 unit shows that you have ownership of physical uranium held by ArcAx as a custodian for the investor. Now, that's as much as I've done in it to look at it. So, Are you better off looking at spot? Yeah. But it's just interesting because I want that to be able to see. It's interesting because the uranium market has a spot, and then it has like a then how it really trades. Like if you're Cameco and you're selling, which is also another conversation entirely different. But there is a discrepancy there. It's not a very fluid market, to say the least. So when you can go in and buy spot and you have something that has a blockchain ledger system, and if it worked well, hey, that's ingenious. We want to see more of that. This is how smart contracts and coins and tokens can work to facilitate, especially in commodities trading or in futures trading, to enforce a contract. Boom, right away, it's done. There's no need for intermediaries in between. It can be done very quickly. This is the genius that people point to when they talk about some of these systems. The one that we talk about a little bit more in our blog, and once again, this is a bit longer blog than I wanted to have. It's like 10 pages right now, is Ripple. So XRP. Now this one has gone through the roof. I mean, if we look at we won't look at the chart, but basically it's up 400% in the last 3 weeks or a month. And this one's hated by a lot of the Bitcoin bros and whatnot, but it is a cross-border platform specifically for institutions. And it's not that simple. It really isn't. I mean, it has a use case, which I like. It's a contract. It's one that banks would be interested in using because it can cut costs. And there is an XRM platform, so you can use the platform without having to use this coin in any event. And we go through how that works and why that there is a coin attached to a platform. But this is where the interesting aspect with a lot of these types of projects is that they come with an interesting case use, but you sometimes have to ask and understand, wait, why do you have a coin metric attached to it? Like, why don't we just have the platform? It's an app, and you pay a transaction fee to be on the app, and it's more efficient, effective, which they often are. And we go into that in the blog. And I don't want, otherwise we'd be on here for another hour rambling on about Ripple. But at least that one, and once again, I'm not saying it's good, bad, or indifferent. It is interesting though. And that's, there are ones like we talked about before, whether it was Ethereum, where it's an actual smart contract. There's something there that people will use. If there isn't something there that's going to be used, then I'm less excited about it. If it's all narrative, I'm less excited about it. And whenever I see who's buying it, I'm either more excited about it or less excited about it. But once again, that trade then is a trade of flows of capital. And people will say with Bitcoin, they'll say, well, BlackRock has made an ETF, and they're going to make an ETF on this one as well, and that gives it credibility. That doesn't give any credibility. Just because a BlackRock decides that they can get a contract together past the SEC to say we'll make a bundle or an ETF, that just means that they've convinced them that they can sell it to institutions, possibly nudge institutions to buy something, and then they make a fee for doing that. Like BlackRock takes no position in it. They're not trading it to go, we're personally buying it so we can trade. They're not. They're saying we've created a product. We're going to charge you 0.1% or 0.2%. And maybe it has $500 billion in it. And it's an ETF. It doesn't cost anything to manage that. It's an automated process, and you collect a fee for it. I would do that all day. If I could make products and just sell them to you and just make a fee for selling it to you and have no care whether it goes up, down, sideways, that's awesome. So when people say that they're in it, so it's a good thing, well, it's a good thing because yes, it provides liquidity for people to get out. But at some point, there has to be an actual value there. And also having this as an outlet that provides the liquidity that people want, because you'll find with any of these, whether it's blockchain or crypto, there isn't liquidity and you're not getting out for the price that you want. And that will get a lot of people that like that space angry and annoyed. But we're going to get into those details down the road here in the future. And once again, I'm not trying to poop on technology. I love it. I think that there's going to be an implementation of these types of things, especially now that we've got a very pro-market person in, pro-industry, pro-technology, and certainly pro-more freedom type of crew in. And then we know that Elon Musk's bias, that's a good hedge as to where to be looking at different things. It's an interesting world, but that doesn't mean that we're not going to see a great year for precious metals. I think it's going to be a great year, and that's not just me. It's far smarter people that have been in these markets for far longer are very excited, because as excited as we can be about the run-up of some of these cryptos, or the run-up of Bitcoin, or Trump's coming into office, all the problems are solved, this type of illusion, is that no, nothing has been resolved. Nothing has changed. Like, the problems haven't disappeared. They're still there. There's a lot of hype and disappointment and emotion right now, depending on what side you are on the table. But the reality has not changed in one bit. So that's my biggest message, is that fundamentally, has anything changed? No. Prices of some things have escalated rapidly, and others pulled back. But what's the outcome? Still, look, what's real, what's physical that we need, and as a risk-adjusted rate of return, what's a better, smarter play for me? Those are all considerations that people have to look at, like when we talk about the market mindset, your mindset. Where do you want to put your speculative dollars? And if it is that, hey, I want to have some fun, put a couple $100 into XYZ coin, yeah, great. It's a lot easier, and possibly easier to justify, maybe, to sit back at home and play that than play a casino, because there's a lot of liquidity. Maybe you'll get some wins. Who knows? It's not investing, but it is a type of trading. And it gets people excited and interested in something, and maybe you'll learn something new. So that's my long-winded rant. I'm glad there's quite a few of you on here to kind of get a sense of what my take is on it. I'm not saying things just to ruffle feathers. I do believe that there is price discovery in some of these things, as far as on the highest of levels of what type of digital currency is it going to be, what type of central bank digital currency or whatever it is that is coming. I think it is coming. I don't know if it's next year or 4 years or 10 years. It'll be an adoption and an easing into it that I think will just simply happen. But once again, none of that means that physical gold and silver or that mining doesn't happen. It's the same euphoria and buzz that happened with the first internet bubble, the second internet bubble, the mortgage crisis, each event that occurs that becomes a big, huge escalation of chaos and uncertainty. The reality is always the same, that there's a reason why big banks, federal institutions, countries, that they buy this physical stuff. They buy silver, they buy gold for a reason. You don't have to like it. Like, listen, you don't have to agree with the narrative. That's fine. It comes back to where is the flow of money going and who is providing that flow. And for me, as a risk-adjusted rate of return, I'm very happy with what gold has done, with what a lot of the producers have done with their free cash flow, and the outlook that some of them have with the projects going forward. That risk-adjusted rate of return makes me sit much more relaxed and at ease, especially since my time frame is much longer than looking a month, 2 months down the road, than a lot of new projects that might spur on other projects. It's fun, but it's once again, you have to look at not what has something done, what could escalate, what could go up 400%. That's not the same as saying I need to be comfortable with a risk-adjusted rate of return. How much am I willing to go out there? Can I go to bed at night not worried? But also at the same time to go, I need to find an edge. And right now, if someone can tell me what they think, other than there might be a change in policy coming, because that's the assumption, they're probably right. With Gensler coming out, with the new team and administration coming in, what it might look like, that's the narrative right now on all of these things. That there's going to be the party is going to be on, and with the party being on with stuff, it just means you get more of the same, more of what happened before. So just have your be careful hat on when you're looking at these things. Will they make money? Yeah, I think you can make a ton of money in the next couple of years on these things. But remind yourself what it actually is. What role does it play? What does it actually solve? That's easy to answer for anything in mining. what does it solve? I mean, here, let's just look at one thing quickly. Just yesterday alone, and then I'm going to let you guys go, and I appreciate your time. I really do. China went ahead with their ban again here. Hold on. Sorry, I'm just bringing it up here. Immediate export ban on gallium, germanium, and antimony. Antimony, yes, that we've heard a lot about lately. You need that for making chips. I think we all know that chips are important. NVIDIA, Intel having some problems. The CHIPS Act in the U.S. Well, the United States Antimony Corp was up 50% today. Right as this second, I haven't looked, but before we started this, it was up 50% as of yesterday. Pretty good for a mining company. So there is the reality that we need the stuff that makes all of this tech stuff. And that's the biggest message. If I want to get across to anyone, and I say it all the time, that's my job, is to promote this sector, that we need to get people excited and to say, listen, if you like all of that crypto stuff and all that, that originated out of the same model as the exploration models of the 80s and 90s. Those returns can be had and have been made in the mining sector, in the juniors and all that, because it's price discovery, it's high risk, it's speculative. You're trying to search for stuff in a giant mountain to find streams of or grams per ton of whatever element, metal, mining, or whatever you're looking for. It's not easy work, but you get rewarded for taking risk. And like the thousands of crypto projects that are completely fraud and useless and a bit of a joke and a meme, you can easily say that about a lot of junior companies as well. They're not going anywhere, but that also means a little bit of hard work. Follow a lot of the great minds that are out there. We've had some of them on the show. There's plenty of great channels right now that I like, that are doing great work. Reach out to me. I'll tell you who they are. But even if you use YouTube, I mean, the obvious ones, you go listen to Rick Rule. There's ones that are going to tell you the same thing. Get excited about this space. Get excited about the market. Learn a bit about the metals and why we need them. The whole battery story is getting a little bit overdone for some people, but they start to look at, well, we need this antimony. Do we have a lot of antimony projects? Rare earth pops up here and there. We know that we need nuclear and uranium. So a lot of these stories are real. It isn't just, it's not solving a problem that is created, which is what a lot of the Bitcoin narrative is. We're going to solve a problem that we've created, and our solution isn't really going to be the solution because it can't transact like as we'd like it to. It never will. We can also fork off of the Bitcoin whenever we want to. So there's lots of holes in the argument, and it doesn't mean that you shouldn't buy it. You shouldn't look at it that it isn't an asset. It is. And that's not me sitting on the fence. It's just, I, like anything, when I hear narratives that are just untrue and they're just pitched out there willy-nilly, unregulated, that I find hard to swallow, because believe me, everyone in the mining spaces knows that we're regulated. And if you say anything, there's going to be a hammer that comes down on you very quickly, as it should be. I mean, no one enjoys someone who's out there promoting, guaranteeing returns, saying ridiculous things. That's dangerous. It's irresponsible. It's unethical. It's all of the above, or trying to pretend like it isn't speculation. It isn't high risk. All of these things are necessary. And, we have an opportunity here in the mining sector, and most of you probably are in it to some degree, to shine a light on the positives that we have, and that we stand in a chance right now to show the world that you don't get to do any of your crypto. All your cross-border transactions are irrelevant unless you have the physical ingredients to make your computers, to make your chips, to give you the energy for your cloud systems, or the uranium for the nuclear power plants they're going to need for AI. The energy and the need for all of these metals for infrastructure it's huge. It's absolutely massive. And I'm going to keep beating that drum. A lot of you are sick of hearing about it because for years we've heard it, but sooner or later, the reality will be heard. It will happen. And it is happening. Like, we see big billion-dollar deals being happen. We see McEwen Copper, I think for this next year coming up, there's a planned IPO. I think they're raising $2.5 billion right now. It is happening on this bigger scale, and that is going to trickle down. So hang in there. It's tax loss selling. Follow the show. We're going to have lots of people on. convincing you why you shouldn't sell them. You should sell someone else, why you should buy them. And yes, you know what? I know of a ton of projects. And when I say ton, probably 10, 20 I could lift right now that are justifiable juniors doing hard work with excellent teams that have every possibility of doing something significant in the year ahead. And that's really cool whenever you can identify that. So keep watching. Send us more questions and engagement. We love it. And we appreciate all your support so far. We get quite a few people on these things now. And just, if you wouldn't mind, hit like, subscribe, watch us on YouTube as well. Do the same. If you post it out there and get it out to other people, whether they like crypto or Bitcoin or whatever, and they vehemently disagree with me and they can't stand me, have them send me a message as well, because that's what this is about. We want to stir up more controversy, more encouragement, more discussion, and have people really flesh out some good ideas and what makes sense. And often, like, once again, there doesn't have to be any battle between the two. The flow of funds should be coming from somewhere else. People should be taking some money out of these ETFs, out of BlackRock and these major funds. They're too powerful. I'll be flat out. I'll tell you right now. And people should take back some responsibility, some of their own, even though, as we said, talk about, flows of capital. That flows of capital issue becomes an issue if there is a fault in the markets. It's propped up by very, very small handful of players. What happens if they have a crisis? That foundation falls down very quickly. It's not spread out. So something to keep in mind. We look forward to chatting with you on Friday. And thanks for being here, everyone. We'll talk to you real soon.